Hello, fellow traders. How are you doing? This is Tom Willard with Tom Willard Trading. Just got back from a nice long vacation, and so I thought I'd post this video on the weekend here prior to the trading week ahead. Looking forward to trading. Those of you guys that want to follow me on Twitter, please feel free to do so. I'll tweet out ideas during the trading session, at least in the mornings, and throughout the day, some swing ideas as well. This video is going to talk about, well, I'm going to just show you the trends, a basic definition of trends. People spend a ton of time on it. It's real simple, so I think 30 seconds will suffice. And of course, if you have questions on anything, obviously just shoot me an email, tom@tomwillardtrading.com. So we're talking about trends, voids, tradable voids, support and resistance in this video. This is a weekly chart of AEGR. Now, it's really immaterial, the symbol, but this is the weekly chart, and it's showing some really nice stuff here. First off, this is what we call a basing ambivalent stage, right? Where the stock is just going sideways. There's not a lot of interest in it. And then it breaks into an uptrend. Notice that it's kicked off here by this volume spike right here. Okay, the moving averages cross over. That's the 20 and the 40 that you're seeing here. Okay, it pops over and it comes up on volume, and that really instigates, catalyzes this move up, which is a monster, right? It goes from about $10 a share, $15 a share, to about 100 here at the absolute peak. Okay, so with trends, here's what you're doing on the sideways, and you're looking, if you're bullish on this, maybe with fundamentals or whatever the case may be, but technicals is where you're going to get your confirmation and give you distinct entries and exits. This is the first notification that, hey, this thing may be starting to go higher. Now you got a number of setups here that you could buy. Now this is a weekly chart, okay, and I talked about setups in some of the previous videos, breakouts, pullbacks, retracements, etc. Flags. This is a beautiful base here. But you notice the uptrend, okay? And the uptrend moves up here pretty swimmingly. And then it comes up and it tops out. This is called the top, okay? Notice the difference between the base, right, before it goes into the uptrend. Look how calm and tight it is in general compared to how absolutely, volatile this is here. Okay, so it's pretty volatile, and that's often indicative of a top, okay? So this sets up, gets wide, comes down, and notice it comes down almost round trips all the way back down here. Okay, so it comes down. This is what you call a downtrend. Okay, notice that when the moving averages cross over, you're already well into the downtrend. I mean, this thing, when the moving averages cross over, this thing's at about $60 a share, and it topped out at 100. Already took a 40% haircut off the highs. So, oftentimes the moving average crossovers are great for confirmation, but they're usually late to the party if you can read the candlesticks. Now, the one tough part of getting into these tops where you're trying to short the downtrend is the fact that, because they're so wild and whippy, it's hard to get a reasonable reward to risk. Okay, where you could put a stop in real tight, get clipped, and then the thing goes down. Okay, so that makes it challenging. It's much easier, in my opinion, to get long on the early stage, two uptrend where things start to go higher versus trying to go with the transition from a top to a downtrend. Okay, and now notice this has come down here. It's settling in. It's basing again. Notice the control here it has compared to here. Okay, much more like the control in here. Okay, and it's just going sideways here. And so it may continue to go back down or it may go back up. But right now it's come down. It's based out here now for a number of months, 2, 4, 5 months. Okay, and it may be setting up to go back higher. We'll see. All right, so there's a perfect example of the trends. Okay, now for tradable voids, support and resistance, well, support points and resistance points are based off of where things traded to the left. So you can see that there's a major, let me just draw this horizontal line here. Right in this area here, you can see that there's resistance up here. Things got to 90, got as high as 100, but in general, there are more sellers than buyers because prices could not go much past 100. Okay, and then the downward pressure here, less buyers than sellers. That's the only thing that moves prices, guys, is if there's more demand or more supply. If there's an imbalance, that's what causes prices to go down. So based on resistance, there's a resistance point. Okay, this is a support. Let me do a different color for support. I'll use, let's see, I'll use orange for support. Okay, notice the support here. It came here, it went up, came back down, found buyers here, went back up. Okay, here in this area here, okay, it tried to find some support in this area here. Here's a support area as well. Okay, here's a support area as well. Here's a little support area as well. Okay, now we came down. We held this, look at it, it came down to the support area here. It popped up and it came down. Notice it paused here for a number of weeks at this support area. and it came down. Notice it's paused here. It's actually held this support area. It hasn't breached it yet. This support area is the next one below, and of course the final one is this one down here, at least on this chart. Okay, so now let me clear these. Now I'm going to point out tradable void areas. Now tradable void, okay, is often using the concept of support and resistance, okay, to help you identify where can prices move quickly without having a lot of restrictions along the way. So for example, notice this move here, right, from here to here. Notice how it went up pretty seamlessly. It went pretty much straight up. It paused here and it went up. So one could say that this little support area, this 2-week support area, let me draw that in there, from here to there is a tradable void. So when this price came down to this area here, this area, let me draw a little arrow here, from here, okay, to here is a tradable void, meaning there's not a lot of resistance points in this area. Okay, you'll notice that this thing does have a lot of tradable voids on the way down because there's not a whole lot of support areas. There's a little V bottom here, right? Not a ton of bars. Okay, here you've got a much more solid support area. So your next tradable void area is, let me just draw a line here. Let's go right across here. Is right here, from here, okay, to here. Pardon my awesome artwork. Okay. So when things start to go into this tradable void, the concept is you find a pattern on your time frame, okay? This is a weekly, you go down to a daily chart to get short and shoot for target-wise the next support area. And you'll notice that if you say you found a way to get in short in here, notice you would have to sit through 3, 6, 7, 8 weeks of really, it went close to the target, came all the way back up probably to your entry, if not put you underwater, and then over 3 weeks came down and hit your target. Okay, this is how prices go sometimes. You can't expect it to go straight down there and hit your target and all is great. I mean, it does happen, okay, but it doesn't always happen. So you have to have ways to manage your plan. Set it and forget it, where you get in and say, you know what, the hell with it. My stop's here, my target's here, it comes back against me, so what? If it stops me out, I don't care. If it hits my target, great. Okay, that's one approach. Another approach is bar by bar. I'll talk about trade management techniques and thought processes in a future video. So that's the tradable void. So notice now when it comes down here, if it comes down, it breaks this area of support right here. Okay, and you've got a huge tradable void. So if you got short here, say just to say 57, your target would be support at around 39. Say that's about a $20 target, right? 39, 49, 59. So $18 target. So you get in, find a pattern here, and then you get in and you short it, and you put your stop in, and you say my target is 39, and you get out when it hits it, and it hits it well. Okay. And then it breaks below here. Where's the next? So now this next one, this next tradable void is this little piece, this little area right here. Okay, when it breaks through there, okay, you short it, okay, with a target of around 29-ish maybe. Okay, so your entry is around 39-ish, your target's around 29. Okay, so these are the concepts of support, resistance, tradable voids. Okay, and of course the basic trend, the basing sideways trend, the uptrend, the top, and the downtrend, and then we start over. The basing sideways trend, okay, and then an uptrend, or this could just be a long pause within this downtrend where this thing continues to go down to lower prices, okay? So I hope you found this video useful. I hope you found that helpful. If you have any questions about some of these concepts, let me know. You can always contact me at tom@tomwillertrading.com.